What happens when the world's largest oil consumer steps in to take charge of the world's largest oil reserves? That is what the US did last week, capturing President Nicolas Maduro and signaling a takeover of Venezuela's oil industry. Venezuela's oil infrastructure is now set to be rebuilt under US oversight. But what does this mean for India's energy sector and Indian stock markets? And why are analysts cautiously optimistic? Let's break it down on markets this week after a quick break. Markets dislike uncertainty, and this episode has added plenty of it. In the immediate aftermath, crude prices saw a risk premium. However, analysts note that even with US involvement, reviving Venezuela's oil fields will take months, possibly years. This creates two timelines. First, short-term disruption, and second, long-term structural impact. For India, the implications are mixed. In the short term, oil price volatility raises uncertainty around import costs. India imports over 80% of its crude requirements. Over the medium to long term, however, there is potential upside. If Venezuelan oil returns meaningfully to global markets, the added supply could cap prices and improve India's energy security. Cheaper and more stable crude prices are structurally positive for the Indian economy. Analysts say Indian upstream firms with exposure to Venezuela could benefit. ONGC Videsh, Oil India and Indian Oil have stakes in Venezuelan oil assets where dividends have remained stuck for years due to sanctions. If US control leads to sanction relief, these long-pending receivables could finally be unlocked. For refiners, Venezuelan crude typically trades at a discount to Brent. India's complex refineries are equipped to process this heavier crude efficiently, potentially supporting refining margins over the medium term. Reliance Industries initially rallied on expectations of access to discounted Venezuelan oil, but that optimism faded quickly. The stock later saw its sharpest fall in 8 months. Analysts see this as short-term volatility, noting that Reliance's scale and refining complexity continue to position it well over the longer term. Market experts flag 3 key factors. First, expect near-term volatility in oil prices and energy stocks. Second, any increase in Venezuelan supply is likely to be gradual. And third, if production ramps up over the next few years, global oil prices could face sustained downturn pressure. For India, that would mean lower import costs and improved refining economics, though not without interim market swings. If you found this breakdown useful, like, share and subscribe for more explainers on markets and geopolitics.